Hello, mic test. Hello guys and welcome to the 94th edition of the Trading Opportunities webinar. I'm just currently checking out the settings at my end, microphone and everything. Well, it looks like everything is working fine at my end. So guys, let's begin. This is the 94th edition of our Trading Opportunities webinar, and before we begin with anything, I'll just like to go over the disclaimer first, covering the legalities. So here's the disclaimer on screen, basically stating also content presented here is basically for educational purposes. I'm not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, or any other purpose, then you yourself will be liable for your profit, your loss of profit, or any other thing that might arise because of you using any of the views presented in this webinar. With that being said, let's now head over to very quickly at the About Us part of the webinar. So guys, for those of you who are new here, my name is Nirav. I'm the admin and owner of the website 50eyes.com, as well as the YouTube channel 50 Eyes Market Analysis, where this broadcast is currently being conducted live alongside our LinkedIn page, or my LinkedIn page, I should say. And so far, we have done 93 of these webinars. This will be the 94th. We always do one on every Friday, and the time is always 2 p.m. GMT, and or I should say, or 7:30 p.m. IST. So whichever time zone you are in, you can convert 2 p.m. GMT or 7:30 p.m. IST to your time zone, and that's when we go live every Friday when the markets are open, actually. So in the past 92 webinars, as we discussed, we had captured 187 trades, and I was just checking before going live for this one what we discussed in the 93rd webinar, and looks like all the setups we discussed in the 93rd webinar have also actually played out. So that makes our winning streak to 4 webinars continuously. Everything we are discussing is playing out. That is basically what I'm saying, is that 6 setups discussed in this webinar, 98, 6 discussed in 91st, 6 in 92nd, and 6 in 93rd. All of them have worked. The analysis has worked on all of them. Basically 24 setups in the last 4 weeks. And this is just the free stuff, and this is publicly available and done live in front of everybody. You can always go ahead and check the records for yourselves, right? So if you are liking the content, you are following it, and you appreciate the fact that I'm providing such quality work for basically free here, then make sure to hit the like button and share it, because we still need more views. And by the way, last time I did ask you guys to share the content, and it looks like the difference is there. 499 and we have now shifted to 940 views. So there is some difference going on in our viewership, and I appreciate your efforts in sharing the content. Kindly keep that up for this webinar and the upcoming webinars. So with that being said, now let's get ahead with the introduction. So I also keep a track record of all the webinars that I've published in the past, videos, etc. Since 2016, I've been doing this. The accuracy has remained 83, 87.5, basically above 80%, as you can see. Year on year track record, this is right. 2020, 2021, and since 2022, we are doing these weekly webinars, for which we are keeping a check on accuracy webinar by webinar, that is per webinar basis, right? So this is the highest in the industry, and this is publicly available information, because these webinars and videos are uploaded to the YouTube channel, which is public, and anybody can check these record sheets. This is basically just the date, the name of the instrument discussed, and the link for the webinar here, and what happened of the analysis, and this is the actual analysis, right? So this is, as I said, is the highest in industry, and I've been keeping a very public or clear track record. I personally haven't seen it with anybody else. People do say they have this accuracy, that accuracy, but their records are not really public. So what does it even matter? I like to keep things as transparent as possible here. So with that being said, now let's head to the last part here. I also do have a private Slack group, which is basically a place where I share my own analysis, live analysis of different markets, as well as my live trades. And we are currently open for membership, but I am seriously thinking of closing it down and making it what do you call, a course specific one. So only the people who are in my course can get to it, because a lot of the people who are making inquiries are just not familiar with the Elliott Wave. So it becomes sort of a problem if such people approach me. So anyways, this is the group here. We do have channels for all the major things. Bonds and yields are also covered, and recently opened up back stocks US and stocks India. Right. So anyways, a lot of things are being covered here. You can request details for it if you are interested by going to 50s.com/contact us. And as I said, I'm thinking about making it specific to people who are in the video course. Right. So that was about our business activities. And as such, now let's head back to our discussions. We will be starting with Euro USD as always, followed by crude oil, gold, S&P's 500 Nifty, and Bitcoin. And the webinar will be also posted on my own website. You just go to 50s.com, scroll to the bottom part, and you will see the 94th webinar appear here after the broadcast is complete. And it will be having the timestamps embedded within the webinar as well as listed out here on the website. Right. So I request you share either the YouTube video link, or if you are on LinkedIn, then the LinkedIn webinar link, or you can just share my website's page for this webinar. It will be 50s.com/the URL. So with that being said, now let's actually go over and start our discussion for this particular webinar. So first of all, I'll just go over the first chart that we will discuss, which will be the chart of Euro USD. And the way we proceed with these webinars is always I'll just go over and check what was the discussion in the last webinar, and then I'll proceed and go on to check the current discussion, right? Let me just enable the bottom screens and everything. Yes. So for Euro USD, let's first quickly check what was discussed in the last webinar here. And after that, we'll check what's going on in the current one. So here we have on screen the last webinar. Now let's quickly and open up the 93rd and check our discussion on Euro. So from what I recall, this has played out literally picture perfect, which we will just also see in the recording just now. So somewhere here, yes, there it is. So this is the analysis from the last webinar. You can yourselves check it by going to 50is.com and 50is Market Analysis YouTube channel, clicking on live, and then the 93rd. So here in this analysis, as you can see on screen, I was suggesting that the wave 4 is either complete or about to get completed, and then there will be a leg up for the wave 5, which we are thinking of taking longs on. And my setup, as you can see, let me just play the video, is to go long above 1.095. That was my setup. Now let's head over to the actual chart now and see how it played out. So this is the chart, and this is where I was discussing it the last time. 15th December was the date. So after that, the market did go above 1.095. Will be somewhere here. Let's see, somewhere here, right? Somewhere here is 1.095. The market did go above it, and the wave 4 we were expecting either it will be here or it will continue. I mean, that's just a general expectation of wave 4. They can consume time, but anyways, it continued as a triangle and then went up again, and basically has just done literally whatever we expected to. So this makes one of these analyses. I mean, all 6 worked out, as I already told you guys in the beginning of the webinar. But if you are joining right now, this is the first one which we discussed last time and has played out as it is. Now let's see what's really happening here right now. So what's really happening here right now is that I believe this is heading up for the 5th wave. Could be a diagonal formation. If it is really 5th complete, then a reversal can happen here. But I'm kind of not very happy with this analysis. First of all, it has sort of disproportionalities among different wave structures. So I'm feeling that we might need to have a requirement to update this analysis, right? But for what it's worth at this point in time, what I'm thinking is, let me just squeeze this thing a little bit. So what I'm thinking at this point in time is that this market should go a little bit more up, right? But I do not want to take any longs right now given this diagonal. The reason for that is if this really is an ending diagonal, then the reversal from here can be huge, right? So what I would like to see is something like this. Let me just show you the structure, what I'm thinking about. A correction first, and then the market taking out the high. So if this thing does happen, then I'll look to add longs above the last high, right? That's the basic setup which I have in mind right now. And as I said, the reason is that the ending diagonals can just mess up the whole structure and give a complete reversal. So that's that. Second thing which is possible here, and I'm expecting might happen, is that if the market establishes above this resistance level, which is currently the price level of 1.1037, then we can expect this market to continue to the upside. So basically, we wait for market to establish above 1.1037. What does that really mean is that the market goes above it and starts to take support at this level. Maybe once, maybe twice, the more the better, right? So as I said, wait and watch on euro. I am thinking of taking longs, but not right now. The reasons are quite clear. And as far as targets are concerned, if this really is the first leg as a leading diagonal and then a correction down, then targets are not really that important. It will have 3 and then a 5, so 2 legs up. That will give you plenty of upside, if you know what I mean. So that's about that for euro. Wait for a zigzag correction or something flat maybe, and then the high to be taken out. This high basically. If not, then price establishing above 1.1037 will be our Q for longs, right? That's about that for euro, and I think I have some comments here. Let me just quickly check. Hello, Sushil. Nice to see you back again. And hello, Ken. So, guys, if you are able to watch the stream properly, because what I'm doing is I'm also streaming this live stream on my mobile device just to see how it's going. And I see sometimes it's getting stuck. So, if you are having some issues like that, please let me know and I'll change my internet connection. If not, just let me know in the what do you call the live chat thing, the live chat basically, right? Again, it's stuck at my end. I'm not sure what's going at your end. Maybe it's just this app's issue. Hmm. What about you, Sushil and Ken? Can you see the stream without any interruptions? Is there any buffering at your end? It's not even buffering because speed is quite good. I think it just gets stuck. So Sushil is saying it's working perfectly. So in that case, I'll just continue with the webinar and probably change the internet connection on the phone itself. And probably that's the issue. Okay, so moving on, our next discussion will be on the chart of crude oil, of course. So let's quickly load up the chart of CL, and that is an interesting one. Lot of activity on this one. Thank you, Ken, for the clarification as well. So yes, as I was saying, a lot of activity on crude oil as well, and let's see what's really going on and how things propagated after our last discussion. So first of all, let's head over to our last webinar's recording on crude oil and see what we were discussing in the last webinar, and then we will build up the current discussion. So somewhere here is our discussion from the last webinar. We had two hypotheses. Recall very clearly, I was actually short on this counter, and I was holding short positions from somewhere here. And the idea was that this was WXY analysis was the one which I used to go short. By the way, I'm drawing on top of the recording right now. Let me just use the yellow color. So this was the idea, and W, X, and Y, and then straight down. That was the main theme we were following in the last webinar. Right, and the second theme was this pink analysis. Let me just play the video again. So as you can see in the video, the second analysis, I'm pointing out that it is expecting or suggesting upward movement. And the trade setup was very clearly discussed that if the market takes out this alert line, whatever this price level is, then basically where the near the wave 3 high, dot wave 3 high, then if the market takes this level, then we'll look for what you call long trade setup, and we will relegate our bearish count. That was the main idea of the last analysis. Let me just remove the comments for now. So now let's head over to the actual webinar and actual chart and see what happened really. This was 15 December. Our discussion was somewhere here. Market did fall, as you can see already. And then the market went up, hit our trigger line, right? This is the trigger line basically. So I had to close my shorts, which I did not trail, which I should have trailed by the way. But I had to close them, and then the whole position reversed, and then the whole analysis was reversed as well. Now it was not as simple as we discussed in the last webinar. In the last webinar, I was just saying that if it goes above this high, which is the yellow line, currently the price is suggesting 72.35, let's say. So if the market goes above 72.35, then we will reverse for longs. Yes, we did. Um, if we did follow that analysis, it did work out, but the whole count has been changed, right? So we want to discuss that count first because that's more important than what played or what didn't play out. So what's the new thing in this count is that let's just see. This is the point of reference here right now at 67.846, right? And what I'm currently assuming is that this market is heading up for at least 3 waves in the upward direction. The long-term count are also there, but I'll just hold it off for probably the next webinar discussion or something because it can take a lot of time. So what I'm personally thinking that right now is happening is this market is heading up for, as I said, 3 waves up. Current leg up is leading diagonal. And by the way, if you are in only in the Slack group, then you would know that we were able to capture this leg down in live market, all of it literally, right? Probably I can show you later on the chart. Let me see if I can just bring that up right now for a sec. There it is. It was like right there, possible leading diagonal in play. Wait and watch for now. And this is what we were expecting, leg down below the white trend line, and then resistance, and then another leg down was the expectation. This is the next count yesterday posted. Market did go below the trend line, starts to take resistance. I draw up another resistance level, the box, the white box, and then this is the follow-up count. So as you can see, we were able to capture this leg down, predict the correction up with the proper targets as well, and then this leg down. All of it was posted live, and Sushil, who is also in our private Slack group, is also here. But anyways, that's the kind of stuff we do here. And yeah, if you missed the beginning part of the webinar, you can become a member right now. We are open, but you need to have a basic knowledge of Elliott Wave. We don't allow people who are complete beginners in it to join it. And I am also thinking of closing the group down to people or making the video course a requirement because I personally don't know where you have learned Elliott Wave. Maybe you just watched a 5-minute video on YouTube or who knows what. There are a lot of people saying a lot of things these days. So that's around the corner. That's just a thought in my mind right now. But anyways, if you are interested, you can just head over to our website 50eyes.com, contact us page, and make the inquiries there. Here, 50eyes.com/contact us, select the subject matter as details for Slack group. So getting back to our analysis, as I was suggesting or saying basically that we have updated the crude oil count, right? So what is really happening now is we are just in the first leg up, and then there's a correction down happening, which we caught, and then this next leg up is expected. So if I were to just remove everything and discuss this, the mere basics, then 1 second. Yes. So then what I'm really suggesting is this, that this is the, let's say, A or 1. I'll just call it an A. And then this is the correction down. Either it's complete here or it will probably continue sideways. But long story short, we need to see a leg taking out the high of 75.223. Keep in mind the data feed on the top left. If you are using a different data feed, then your price or the high level will be a little bit different. Of course, you know already if you are in actual trading or you're an actually trader. You are actually a trader. That's what I'm saying. So anyways, quite cold out here. So anyways, as I was saying that this is the expectation, A up and B down, and then C up is what we are expecting. So the second possibility is that if this B is continuing, then this market can just propagate sideways within this box range. Actually, the box can expand to the upside. It can go a little bit higher than the last high. Something like this can happen as well before the market actually takes off, right? So this is the minimum expectation, and basis of that, I'll be looking for long setups on this counter. Basically, the clear, simple idea is that you just take a long above the last high, right? But as I mentioned, it can do something like this as well: go above the last high and then give a retracement and then take off for the next high. So in this case, your stop loss will have to be literally near the lows or the wave marked wave B lows, right? So that's a big stop loss. So position sizing has to be really good in this particular setup, right? I cannot propose every single thing here regarding position sizing. Of course, this varies from trader to trader, account size, and the way you are trading. If you are trading options, it will be different. If you are trading futures, or if you are trading option strategies or naked calls, it will be completely different from those perspectives. So I won't comment on that, but basically that's one thing. And the second thing is I'll just mark with the yellow count. This is the second thing. So both, let's say H2 is suggesting straight up, and H1 is suggesting a minor up leg followed by a correction and then another up leg, right? Hope that makes sense. So that's our discussion on crude oil. And lastly, as you can see, oh, by the way, I have some comments here. Let's just quickly check that. Hello, Luis. Good morning to you. And Sushil has posted something. I am in the Slack group to the University of Elliott Wave. Thank you for the comment there, Sushil. Sushil is finding quite a benefit of being a member there. So yes, as I was saying, lastly, we want to check what are the expectations as per the targets go, right? So you guys already know that in a ABC kind of move, you expect the wave A's measurements to project the targets for the wave C. So you can just measure this length and project the what do you call points it has over there as 1:1. But we have to be a little bit more realistic. Waiting till 1:1 is not always practically possible. As traders, of course, if you are just an analyst, you can say whatever. But I personally like to exit before the worldly known targets. So personally thinking 61.8 around 76.894, I'll just mark this over here will be an important level. If this does work out, then the next upcoming levels will be, there are some intermediate levels, then the last important level will be 79.709, right? So as I said, 76.9 and then 79.7. We'll just type that out. So these are the important levels to the upside. But as I said, I'm currently not in a trade on crude oil, and we'll see how things goes before planning another trade. So that was it for crude oil. Now let's head over to gold, which is also the thumbnail image of this webinar, as well as it is also the thing people are liking a lot, apparently. So in the analysis of gold, as I said, we always do look at the last analysis before heading over to the current one. So let's quickly do that. And I mean, this one is to the point. It is literally playing precisely, not from today, like from the last multiple webinars. Gold has been working, as we say, like, I'm not even kidding. Whatever arrows I draw, it's just following it like anything. So anyways, these are the arrows I drew in the last webinar. Let me see here. Quality is 1080p. Always turn the quality to 1080p. These dark backgrounds are just insufferable. Right. So as I said in the last webinar, you can see here, it's the recording from 93rd webinar, right? The analysis was basically that we are looking for a wave A up, B down, and then a C up. And this is the white resistance zone, etc., etc. And I did made a huge long trade here in crude oil yesterday itself. And I mean, it was bigger than the whole profits of the last 2-3 weeks combined, right? Roughly speaking. So gold has been following the analysis very well and giving us exceptional trades. I'll probably show you the trade as well as we move forward with the analysis. But this was the expectation that it's moving up for A, B, and C. This is basically a zigzag pattern and Elliott Wave terminologies. It basically is something like this. I'll draw on the right hand side. So this will be called an A. This leg down is called a B, and the next leg is called a C. Right. So now let's go and see the actual chart here. This is the actual chart. And by the way, remember, the last webinar was done on 15th of December. The time was somewhere here. Somewhere here we did the last webinar, right? So as I was saying, we were expecting a leg up for an A correction for a B, and then another leg up for a C, right? So this is the analysis from the last webinar. And as you can see here, it has basically performed as it is. And let me just remove it and show you the counts here, right? A up, B down, and then C up. So basically this is the count, and this is also the image for this webinar's thumbnail. So it is already inside the white resistance zone. Let me remove this arrow. It's kind of useless at this point anyways. It's already moved up, or I'll just leave it. So as I was saying, it has already moved up into the white resistance zone. The secondary target expectation will be that the market moves near the high of it, which is around 2078, 79, something roughly speaking. But as you guys already know, I'm not a big fan of holding till the end. I don't think most people do hold till the end who are actually traders. These things are generally targets are generally just for getting an idea and position sizing accordingly. You always want to exit with a bigger position beforehand and maybe leave something on the table for luck to play its hand or show its hand. So, anyways, coming back to the discussion, this is the A up, this is the B down, this is the C up. As I said, this is a zigzag pattern Elliott Wave terminologies. The main targets you can look for is A equaling to C. That's the main thing generally people look for, and we also have a resistance zone. So I'm not looking for A equal to C. We are mostly interested in the resistance zone because that's more important at this point in time. Now, two things can happen here. If this analysis holds picture perfectly, that is, the market is just a correction, going up in a correction, then we expect the market to reverse somewhere within this white resistance zone, right? Basically, something like this may happen, right? But again, keep in mind, we do not have any confirmation for it. It is also possible, and you may have noticed it. I discussed it in the last webinar, but you may should have noticed it. I mean, we are following this pattern for such a long time now. We have literally captured these legs, this parts of many parts, this leg up, this leg down, and this leg up, and whatnot. Like a lot of these moments we have captured. Right. So, anyways, as I was saying in the last webinar, also that it is also possible that this is the actual low, and this correction which we are expecting right now as an impulse, again in an Elliott Wave terminology, an impulse is a 5-wave down progression. So if that's still happening, then maybe this market can go down. But as I said, it is a possibility that this whole correction is already complete here, in which case this market can just take off. So now we are going to look for clues or ideas on how we'll know if the market has completed the whole thing, right? To do that, what we'll do is we'll just look at the current chart. So in the current chart, what you see is actually it's not much of a what do you call complex discussion or anything. It's quite simple here as it is. If we see the market sustain above this white resistance zone, that is the market goes above the level of 2079 and then sustains above it, that is gives corrections above this 7 level, then I will consider the idea that this market can just shoot up from here or take off from here, right? Unless it does not, unless it obviously just shoots up right away. That's also possible. But anyways, that's the main theme here. If it sustains above 2079, then we will consider longs or straight up longs. Otherwise, we are already looking for a reversal in the white resistance zone, right? And just for context, you guys should note that we are already in what you call multi-year resistance here. So this is the high around 2072 to 2080 something. This is the level where this market has been sold off multiple times in 2020 August, March 2022, May 2023, and now we are in December 2023. So if this level is taken out this time, again, by the way, it did try to break above it. And as you can see the spike on this daily chart, the market did try to go but could not close. So failed attempt there. So this time if it crosses, you can expect much higher levels. And if I just squeeze this chart to give you a context of things, this has been propagating sideways for a very long time, right? 2020 August, and this is what October 2023. So multi-year buying or accumulation is there, right? So in price action terminologies or volume price analysis, you will call this accumulation. So basically, the idea is that perma bulls or people who are bullish on gold for the next few years are acquiring here. They're basically acquiring every down move. So the bigger the accumulation time, the bigger the up leg. So this is a multi-year accumulation. So you expect extremely strong up legs. Even giving upside targets is pointless. It will just blow through targets like anything. So I can just say any target and will probably take that out. So that's the main theme or the main idea. So yes, I think we have discussed gold quite enough. I'll probably show you the gold trade as well, which I'm talking about. Mm, Let me see where's the post here. So yeah, this was the post posted in our Slack private group, of course. Wave C complete and rectangular, no confirmation yet, and we were expecting that this market will. I was expecting to take longs once there was a confirmation for upward move, and this was all live, of course. And after that, added longs here at 2044, and then exited at 53. The last one I was exited 53, right? So that was longs exited 52 actually. Sorry. So that was about that for our the live trade which I took on gold. So was the second biggest win, and the activity this week was just focused on two things: S&P is 500 and why does it keep coming back? Yeah, S&P is 500 and gold were the two things where the most of the trading activity was here. So somebody is inquiring charges for group, sir. So you'll have to, as I said, request details. We are not interested in making these informations public right now. If something changes, we'll make a page for it. Now let's head over to our S&P's 500 analysis. And before moving forward with this, of course, let's have a look at the recording from last session and see what we did discussed on S&P in the last webinar. So let's see recording of S&P. So this is the recording from S&P's discussion, last webinar discussion, basically. What I'm really suggesting here is that we are in a wave 4, which should then be followed by an up leg for a wave 5. And here is the rough projection of the internal counts here, which the assumption was that was a possible nested formation. Now, what really happened was that the market did go up. So this short-term analysis did work out, but overall, this nested formation, which you are seeing, we have updated the count. So short-term wise, yes, the market did go up after this dot 4 here to new highs, at least new highs from the 4740 higher than 4740 basically. But overall, we have updated the count. So let's look at the actual chart. 15th December, for the sake of context, this is where we were discussing the market. 15th December. Here, somewhere here. Yeah, actually somewhere here. Yes. And from here on, the market was expected to go higher. It did go up. Now, this correction, I have to say, was a little bit sharper than expected. I was expecting what do you call volatility on this counter, or basically not this counter, just basically all the major instruments can become volatile at this time of the year. Basically, last month, December, and specifically the last 2 weeks can have a lot of volatility. It's just something that happens if you are trading. You already know that. So, but this was a little bit bigger than expected. So for that purpose, we have to update the counts. Let's see what is the updated view on this counter. So we are just looking at things from the point of reference around the price level of 4104. So this is where the counts start. And we are counting an impulse in the upward direction. An impulse in Elliott Wave terminologies is a 5-wave movement in the upward direction. So we have the 1 complete here, 2 complete here, and 3 and 4 and 5 will be the progression. Now here's the thing here. It has basically 2 possibilities here, and I think the second one is actually playing out. So I'll just discuss both of them. Right. So the first possibility is that this is the 1, this is the 2, 3, 4, and 5, and I believe I have checked that the 3 is not the smallest, but it does look so small. I have to check it again just to reconfirm. Yeah, 3 is not the smallest, as you can see. So anyways, the first possibility suggests that the 5 is complete, but that, as I said, is not fitting in with the current scenario, because after this sharp drop, the expectation will be that we will see either a sideways move within this box range, or we will see another leg down. But this market is just basically showing a strong rally. So this is the second idea which I have in mind. I think I have posted it here as well. So basically, I'm thinking that maybe this still is possibly a series of impulse in the other direction. And in which case, it is still a little bit like too fast, because even wave 2 still is expected to spend some more time. But what I can assume here is that this market is heading down as a flat correction, possibly of the running nature, right? Even expanded is possible at this point in time. So basically, that's the expectation, that this is the wave 2 possible flat structure in progression, and because that's the only pattern where we can see, not really not the only pattern, but the pattern which I think fits this current context, where we can see the market taking out this high 4787, and then still continuing the correction for before taking up new highs. So this is the main theme which comes to mind right now. Second thing, actually, it's going so fast. I'm just thinking, why am I doing this webinar? I should be trading it, right? I need to do some short-term analysis on this one then, right after the webinar, possibly. So yes, anyways, as I was saying, that this was just one of the things that have come to my attention. All other things are quite bleak. If you look at the main count which we discussed, or the first count, if the fifth is complete here, then you already know that the correction can be quite deep. We can expect even a 50-60% retracement, but at the bare minimum, 23.6, 38.2 is just something you have to consider, right? And if I draw all those lines and remove the counts and everything, you can see that this market had opened itself up to a huge downside here. This is basically the level of 4630, and then this is 4524. So all of these levels were possible, but this strong rally is suggesting that it's not gonna do any of it. So that's where the alternate count comes into play. Let's see if there is something for the upside. Yes, for the upside, there is immediate resistance coming at 4810. Is it? No, I don't think it's the lifetime high. Let's just check the lifetime high. 4819 something. So immediate resistance is 4810, and then 4820 will be the next one, of course. Right? Super bullish activity on this. And we have just discussed the two cases. One is quite bearish, and the bullish scenario is seemingly what's playing out. I think I have short-term analysis on this one as well. So basically, that's it for our discussion on S&P's 500. I'll just move on, just quickly label this thing. If this really is a C, then that itself can take it to 48.10, because then it will become the first leg here, second leg here, and this is just proceeding for the third. Right, so super bullish from a short-term perspective, of course. And if the sideways correction or the bearish count is playing out, then this should just die down, and in which case I believe the structure will become a sort of a complex correction, a WXY pattern. But anyways, that's not really what you call something I need to discuss at this point, given the strong uptrend. So that was that for S&P's 500, guys. Let's now head over to the Nifty counts, and then last one will be Bitcoin. And as you already know, in S&P, huge correction was seen. Such was the case in Nifty as well. Of course, these do have correlation, and even if the correlation may not be very strong, the correlation is good enough to be followed by strong legs. So strong correction in one of those does tend to reflect in the other one as well. And here it is, as you can see, from 21,575 something to 20,990 something. So, anyways, let's discuss this count. And before doing that, have a very quick look at what was being said about this chart in the last webinar. So, last webinar, which was the 93rd webinar, we had discussed Nifty, and as you already know, the analysis for all four webinars which we have discussed already in the beginning, but I'm just repeating myself here. All the four webinars, all the six discussions, which do basically all 24 discussions from the last 4 weeks have played out. What is this? 40 to 22 something. Yes, somewhere here. So yeah, this was the analysis from the last webinar. I was suggesting that more upside should be seen on this counter. I'll just delete any drawings. So that's, as I was saying, more upside should be seen on this counter. And I mean, it did go up from a short-term perspective, but there is some updates I have done to the count. So anyways, the last time we discussed, it was 21432 was the price. Expectation was that it will go up. 21432 is somewhere here, I think. Yes, somewhere here. It did go up to 21582, but then saw a severe drop, which has made me redo the or update the counts basically. Right. And yeah, by the way, forgot to say or request you guys that if you are liking the content, do keep in mind that making these webinars, posting the updates, publishing them on different platforms, etc., takes a lot of time, and obviously the analysis itself takes many or sometimes to do, right? So your appreciation in the form of likes and more importantly sharing is required, and I've been requesting that for quite some time here, and we do seem to be seeing some changes here. 93rd webinar received 942 views thanks to you guys sharing the content, while previously we were stuck around somewhere 500 land. So kindly keep doing that good work you guys are doing, and hit the likes, share with 5 of your contacts or more in trading groups, etc., and keep that viewership increasing. Right, with that being said, let's now head back to our analysis on Nifty, and this is kind of quite straightforward analysis. As you can see, we are looking at an impulse, and in Elliott Wave terminologies, as I keep repeating, an impulse is nothing but this simple looking structure which will have 5 waves. And if we compare this chart with the actual price data, we will find that we are somewhere in the middle of this three, right? Because in Elliott Wave terminology, impulses are fractal in nature. So waves 1, 3, and 5 will have 5 waves inside of them. So if I magnify this wave 3, then it should look something like this. It will again have 5 waves inside of it. You can call that, let's say, dot 1, dot 2, and so on and so forth. Right. So once this dot 5 is complete, we will call that this 3 is complete. So in this case, we are at dot 3 here. So that means sideways correction or minor downside correction is expected, after which the price should resume to the upside. So that downside correction may have completed here, or it may just be continuing sideways. That becomes our point of discussion for this webinar. I don't think 15 minutes will be clear yet. So let's look at it on a shorter time frame here. Keep in mind, short-term time frame analysis may need more updates. So things that you see here may just be updated right at the open, or might need a complete redo at the open of the next session. So what really are we expecting here? We are expecting that this wave 4 is either complete here or it's continuing sideways. Both things are possible, and even sideways followed by bearish movement is also possible, right? But that all is well and good. We need to find something more specific here. So more specifically, we had the first support level coming at 21,057, which this market has already tested and then went up from there. Second support level is incoming at 20730, quite low actually. So if the market is extremely bullish, then the first support level should be the one where it bounces from. So if not, then we already know the second level. But short term wise speaking, it looks like we may have a corrective ABC in the upward direction. I should probably just type it in with the counts. So something like this is what we are expecting in the upward direction. I should just change the color because it's not matching up. So anyways, A up, and we are currently in the B wave down, and then we'll just see another leg up. So basically, if I were to draw out the rough propagation of this counter, we are expecting a movement like this. But then again, as I said, this is a very short term analysis, and things may need an update right at the open as well. If they do not, then this is what we are expecting on this market. Market going at least around 21445, right, which is this level. And from 21445, it may take a short-term reversal. And that reversal should then see more buying, and a new buying wave should follow, which is what we call the wave C circle here, right? So this is our analysis on Nifty. As I said, swing perspective wise, this may just be a minor correction, which is still having one more leg down remaining. Second possibility, let's see if I can change it. Yes. Second possibility is that this market has already completed the correction here, and it will just straight out go up from here. So all of that remains to be seen. What I do see right now very clearly is just that 21445 is the immediate short-term resistance, right? And more information shall become available when we see the next session open. So that was about that for our discussion on Nifty. Actually, it went a little bit bigger than expected, or lengthier than expected. And let's now head over to our last discussion, which will be BTC. Again, BTC, we are just expecting sideways movement. So I have updated the counts here a little bit, but let's see the exact discussion which was done in the last webinar on Bitcoin and how things have proceeded from there on. So this is the discussion on Bitcoin. Somewhere here we were discussing it. Yeah, this is it. So this is the last webinar's recording, 93rd, as you can see if I scroll here, 93rd webinar recording. Basically, what I'm discussing is that this market should remain sideways here, and once the sideways movement is complete, then we are expecting a strong upward, possible upward movement maybe strong, maybe just a minor up move. And the alert line was at 43989, let's say 44, right? So what has happened is that the market has remained just sideways since then. Now let's quickly go over to the actual chart. So this was the discussion level in the last webinar. Somewhere here we were discussing the market, somewhere here. And this was the box I drew. As you can see, the market did fire the alerts, but it hasn't done anything substantial. What I'm assuming is that it is proceeding sideways as a possible flat structure. Let me just enlarge this and show you what I really mean by that statement. So if you have been watching few of my webinars, then you already know I follow Elliott Wave and my own research on the matter, which I've been conducting for 7+ years. And what I think is happening right now is that this is the first leg down in the correction. Next leg up is proceeding. Can be counted in multiple ways, but basically, long story short, is that this next leg up, which is what we call the wave B in a flat correction, can take out the last high, which is around 44,756, and give a false break at once, right? Why do I say false break? Because if this is a flat correction, really, then after the wave B has proceeded to the upside, the market can give another look down or another move back into the resistance box, this yellow resistance box. So in cases like this, what happens is longs are triggered here, then they book the losses when the market goes back somewhere here, and after that the market takes off. Right, just a classic flat correction, trapping traders on the long side as well as people who think that the breakout failed. They will see the market move back into the box range or sideways range, and they will enter shorts maybe here. So it basically traps on both sides. So that structure might be in place is our expectation, and in accordance with that, I am expecting this market to take resistance around 45820 and can also go up to as high as 46473. So around these levels, this market can just go and then show a reversal as well, right? As we just discussed, it can go to this level, show a reversal, or to the next one, and then show a reversal back into the sideways range before taking off. Just keep that in mind. But overall, the bias remains bullish on this counter as well, right? So with that being said, all our analysis have been discussed completely. And as I requested multiple times, make sure you hit the like button, and much more importantly, keep sharing the webinar. It's available on YouTube since it's complete now, and it's available on LinkedIn page, my LinkedIn page, as well as on my website 50hours.com. So whichever way you like to share it, you can just share it. And thank you for being here till the end. And Sushil is saying thanks once again for giving your precious time and educating us. You're very welcome, Sushil. So thank you guys for being in the webinar till the very end, and hope you guys take care, and I'll see you in the next one, guys.